Hey guys, hope you're doing well. This is HTrade. I am a partner trader from Wesley Trades HQ, and I'm quickly giving you guys a breakdown of the past 2 days, the trades that I took the past 2 days, and man, what can I tell you? My stats is looking good, really good. I have a 50k eval account with Funded Next, and so far it's running at a balance of 25,133 and 90 cents. So I'm very close to passing the account. And let me quickly take a look at what date I started this account, on the 25th of November. So I'm doing pretty well. I'm doing really well. I am pacing myself. So little by little, I'm getting there. All right, so just as the name of the YouTube channel suggests, it is the road to futures, right? So what does that mean? It's my journey to become a profitable funded futures trader, right? So basically, let me show you the past 2 days trades, right? All right, so let's start with yesterday. When was that? Okay, now yesterday morning I posted the previous day's trade. All right. So let's have a look at what happened during the course of London session yesterday morning, right? So London session yesterday morning. I took a trade from roughly this area. Price ran down and I took profit basically halfway to my TP. My TP target was much lower than this, which was literally the Asian low. But I took 240. Yeah, there we go. I closed around here. And then I started with a nice, well, roughly 200. I closed a little bit later on, but I took $200 off that trade. Now, the reasoning towards why I took that trade was very simple. So if you take a look at the previous day's daily candle, so that was what, Tuesday? No, yesterday. I'm talking about yesterday, Wednesday, right? So yesterday we opened up, we took out the daily candle high of Wednesday. It was here. We already took that high. We already took the body, the liquidity of that. We actually took Tuesday's high already. Here we go. Here is Tuesday's high. We already took Tuesday's high during Asian Open. Easy, right? And then what happened? I waited patiently for the 15-minute time frame to turn bearish. Now, how do I know when the 15 minutes time frame turned bearish? Now, here is what I do. I follow inverted fair value gaps. I love following inverted fair value gaps because they are a signal of a trend change, basically, right? So here, okay, this is not a good example, but every single time that a trend change occurs on, this is now the lower time frame of the 15 minutes, right? 15 minutes. So here you can see this is a bullish fair value gap that turned into a bearish fair value gap the moment that we closed below it. So this is a inverted fair value gap. So this is a bearish inverted fair value gap. The reason why the word bearish is being used here is because it's a bearish indication. It's a bearish indicator, right? So this is a bullish fair value gap that turned into a bearish indicator, basically, or bearish move. All right, again, bullish fair value gap, close below it, it turned into a bearish inverted fair value gap. We tapped that inverted fair value gap and we sold off. Same thing here. I actually pocketed money off this, of which move? This move here. Same thing. I just followed this move whole time. So we tapped that inverted fair value gap. We went down while we were going down. Here, as you can see, we created a bullish fair value gap. It turned into a bearish inverted fair value gap. Price came here to test it, and I profited off of that trade by taking a sell. Very, very smooth. And then after this, here is a bearish inverted fair value gap that turned into a bullish, a bearish fair value gap that then turned into a bullish inverted fair value gap. Boom. Same thing happened here. Bearish inverted fair value gap. So a bearish fair value gap that turned into a bullish inverted fair value gap. We tested that inverted fair value gap and we went up. So why did this one work, but not this one, for instance? So here we also had a bearish FVG that turned into a bullish inverted fair value gap. Why did this one not work? Because at this point in time here, the trend kind of changed. As you can see, we started closing below a low turning point. We started closing lower below a low turning point, right? And then after that, we created a lower high. So instead of creating higher high, higher high, higher high, now we started creating a lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high. Inverted fair value gap, tap that inverted fair value gap, and as you can see, what happened after that, right? So if you properly follow inverted fair value gaps, especially on the 15-minute time frame, you will be amazed at the type of moves that you will catch. And now we're getting to the trade of London session. Okay, right. So bullish inverted fair value gap, we went up. We created a bullish fair value gap. We just simply retested that bullish fair value gap, continuation buy trade. And let's take it one candle at a time. We went up, lower low, so higher high, lower high, higher high, lower high. Sorry, higher low, sorry. So higher high, lower high, higher low, higher high, higher low. We almost created a new higher high, but we did not. What happened after this? Lower low. That was the indication here. This indication here that we closed below that candle body, we created a new lower low. we had a bullish fair value gap that turned into a bearish inverted fair value gap together with a accompanied new bearish fair value gap. We tapped it. I took my trade and we sold off. Or was it here? I think it was here. Sorry. I think this the trade was here. Here I saw that the 15-minute trend started changing after we have taken out the previous daily high. The 15-minute trend started changing by confirming a new lower low, lower high, lower low, tapping that bearish continuation fair value gap. But here, yes, we did close above this inverted fair value gap. But what did we not do? We did not create a new high. That was my indication that we're going to sell off. And we did beautifully. With this move, I took a beautiful sell. And yeah, that's how I got to this trade. Very simply, previous daily high taken, 15-minute change bearish. We tapped a 15-minute inverted fair value gap. Entry model created, and we sold off. That's it. The rest is history. That's it. Easy as that. It's literally as easy as that. And don't even dare trying to take another trade seriously. You could have, like here, could have taken another sell here, because the trend is, the 15-minute trend is still bearish. You could have still taken a sell from here by looking for an entry model on the 5-minute time frame, maybe. I think the 5-minute gave me a nice entry model. Here. I think I sold here. Going down. Yeah, there we go. I was away. Yeah, there we go. Here we go. So the trade was here. There. I had my stop loss there and my take profit at this 15-minute inverted fair value gap. I knew the process was going to react off this, so I went out when price went to the 15-minute inverted fair value gap. So that was my trade. Easy as that. All right. So now let's move on to New York. Here you will see I was following price still. Let's have a look. So next up, what happened during London trade stop loss? Okay, cool. So I tried to take another trade. I tried to take a buy actually. Oh, there we go. Okay, cool. So I hit my stop loss. So I took a profit from this trade and I took a stop loss from this trade. All right. Oh, and what happened after that? I told the guys, no, I'm not going to trade anymore. I'm done for the day. And then suddenly, out of nowhere, there was an unplanned news event, something about Microsoft AI sales quotas, and the S&P 500 tanked, NAS tanked, and then I thought to myself, what usually happens with unplanned news events? Unplanned news events, you wait until price fall to a specific key level of some sort. So the key level that I was looking at was on the daily time frame. Price fell. This was yesterday, Wednesday. Sorry, this was yesterday. Yes. Let me proceed. Let me show you what happened. Price fell like this. It tapped what? This is the daily time frame. This is Tuesday's daily candle. What did we tap? We tapped the body, the bottom of Tuesday's, basically where the candle wick starts. We tapped that area. This area, this whole candle wick here is liquidity. you will start noticing I will be using this over and over again. Daily candle wicks are liquidity. So we tap this liquidity, and since this is an unplanned news event, what happened the previous day? We tapped into a daily fair value gap for liquidity. We used that as fuel, and we started going up on Tuesday, and we ended bullish on Tuesday, right? And then today we tried to continue this momentum by taking out the high of Tuesday, and we wanted to go inside here for price to just go up further, like retest at least 50% of this body of this candle, to use that as fuel to go further up. But what happened instead? That unplanned news event tapped into the liquidity of the previous daily candle week, and that was completely unexpected. That was more fuel that than the market actually wanted. So what happened? This is like candy for big investors. Candy, candy, candy. You see this? It literally tapped that level. It tapped it by the wick out of a 5 minute. After 1 minute even. And we started making a reversal on the lower time frame, and I said, I'm gonna buy. I'm gonna buy. I'm gonna buy. I held my buy. And I held my buy. And I actually went out halfway, because that was already at almost like 2 to 3 RR, and I closed my trade in beautiful profits. I actually made all the profits back, all the money back that I lost. Beautiful, beautiful profits. I actually took a secondary trade, a secondary CE trade actually. Let me show you how this happened. This was beautiful. We tapped the CE, the inverted fair value gap of this. We actually tapped, we were tapping a significant 15-minute liquidity level as well. We closed above that inverted fair value gap. And boom, there we go. And I took profit there. And I closed in very nice profits. Very, very nice profits at the end of the day. So today, let's move on to today, shall we? So this was yesterday, Wednesday, right? So let's move to the 15-minute time frame. And let's just play it out. And as you can see, price went all the way up because, like I said, what happens with an unexpected news event? The market gets more liquidity than it deserves. What does that mean? This is discount, baby. The big investors is going to buy like a mad thing. And this is exactly what happened. Because the price actually wanted to be here before this drop. So this was unexpected, but big companies, big institutions made so much money out of this move. It's absolutely insane. And I was very happy to have caught this, thanks to the way that I analyzed the market. Just the specific way that I analyzed the market. And this is exactly what happened this morning as well on London time frame. What did we do? What did we do? What did we do exactly? We took out previous daily high, which is around here. Let's take this as an example. Took out the previous daily high. We retested. We made a reversal on the 15-minute time frame. We actually did not make a proper reversal, by the way. We did not make a proper reversal. Why am I saying we did not make a proper reversal yet? Because we haven't closed below that. To say that we have created a new 15-minute low. This is a higher low. This is not a lower low. So that's why I said the trend was still moving. I actually caught a little bit of this move here. And then I think I got stopped out somewhere. With this move, I got stopped out. And then during New York Open, I thought to myself, but where is price going with this move? What are we doing? Then I just looked left on the daily time frame, and wouldn't you know, we closed above a daily turning point. We actually tapped the liquidity of a daily turning point here. You see all these wicks? Liquidity. We tapped that liquidity. And boom. Take a look at that monumental New York Open move. Why? Because we took a daily turning point liquidity, and I was eyeing this and I was eyeing this the whole time. So I thought to myself, now where is price going to fall to? At least, my answer was at least the low of yesterday's daily candle, which was here, 25,600. And today I was very patient with New York. I thought to myself, okay, I'm going to wait for at least a 15-minute confluence to be printed to show me that we are bearish, and we did. We printed this 15-minute candle here. We closed below that fair value gap, which turned this into a 15-minute inverted, a bearish confluence. 15-minute inverted fair value gap. Bearish confluence. So what's next? We look for a sell. We basically tap that inverted fair value gap beautifully, and everybody in the group thought I was selling off this 1 minute fair value gap, but in the meantime, we tapped that 15-minute inverted fair value gap. We tapped CE here, but I went into the trade around here. Went into the trade, my stop loss was there, my take profit was here, and boom. Took my profit, and I went on. Cool. Beautiful trade, absolutely beautiful trade. And then I just gave it time, because we've hit this 15-minute liquidity level. Now price is playing around and playing around and playing around, because it already hit a significant low. What significant low am I talking about? Take the low of Wednesday and the high of today and draw a Fibonacci tool. What do you see? What significant Fibonacci level have we tapped? The 61.8 Fibonacci level. All right, cool. So here we went up. I marked out this inverted fair value gap just to show. Actually was looking, to be completely honest with you guys, I was looking for a buy here. I was looking for a buy, and I think I was in a buy here. No, I think I took too many trades. So I took this sell, then I tried to take a buy here. I got stopped out a little bit. Price went up. I took another buy. I took my take profit around here. So I was still in the plus, basically. And then I waited. And I thought to myself, you know what? Let's just wait for price to properly retrace a little bit. And now I'm going to tell you. All right, guys. Take a look on the 15-minute time frame again. There's our inverted fair value gap. What did we do? We tapped it. This is now, remember, 15-minute moves on its own. 1 minute moves on its own. 5-minute moves on its own. 15-minute only created the inverted fair value gap. We're now testing it, but we're not only testing it. We're testing what? Premium. A premium level on the Fibonacci, which is a 50%, and between the 50 and the 61.8%. And I went down to the 1 minute time frame, and I waited for an inverted fair value gap. which we got. We tapped that inverted fair value gap, close to CE, or at least halfway to CE. We printed a bearish candle, and I went in for a trade because this was a beautiful, beautiful trade. I went out, and then I took my profit, and then I just kept on watching the charts, and then this happened. You see? This is what happens when you wait for an A+. This for me is an A+ setup. A+ setup. And that's it for today. So thank you guys for watching. Thanks to this move, I now have 52,133.90 cents on the Funded Next account, eval. And I am very close to passing this account. Very, very close. So yeah, let's just see what the next day brings. All right. Cheers, guys.